Thank you guys. Thanks for joining me once again on my channel. I'm super excited to be here to be able to provide you with this dope content. I hope you have been blessed by the videos that we've been dropping so far. Thank you for so many of you that have been obviously sending messages of appreciation. We are glad we're able to do this. On this channel, we talk about forex trading, cryptocurrencies, property investments, and personal finances. My name is Michael Martins FX. You are joining us for the first time. You want to subscribe to this channel. You want to obviously like our videos, drop some comments. I want to hear from you. What have you been up to since the courses that you've been obviously watching and been listening to? And anywhere we can improve to be able to provide you with your desired content within the niche of forex trading and other areas that are previously mentioned. And thank you once again. If you are joining us for the first time, Michael Martins FX is the name of the channel. You want to subscribe, you want to obviously turn on the notification bell so that whenever we drop any of this content, you will be among the first to be notified. And then on the TikTok, on the Instagram, Michael Martins FX, you want to obviously follow us, like our contents as well, so that we can be motivated and encouraged to do more. Like I normally will say, everything we are discussing here is to help you to be able to have a better year, a better financial year. How you can be able to combine forex trading, crypto, and all that with your businesses or your 9 to 5. We provide you with all the guidelines and all the knowledge that you require. Now, today we are going to be talking about an important topic. Now, we're going to be talking about a topic that will chart the course of your entire obviously forex trading journey. So let's quickly deep dive because this is a very big topic. Yeah, it's going to be one of the biggest topics in the series that we have been basically looking into. Now, the last couple of topics, we did something around major currencies. We did say, don't forget, like normally we say, make sure you grab your pen, make sure you grab your note, because this is an educational channel. It's going to educate you to become a professional, profitable forex trader. Okay, and you cannot jeopardize the chance that you have now. Now grab your pen. I have my pen and I have my book here. Even that, despite the fact that I am the one obviously providing this content, I've done all these slides already for you guys. I still have my pen and paper right in front of me, right, to take note of some very important topics. Now, we talked about the fact that we have 8 major currencies in forex trading. And what are those currency pairs? Now, we have the Australian dollar, guys. We have the Canadian dollar. We have the Switzerland francs. We have the euro. Okay. We have the GBP, which is pounds. We have the JPY. We have the New Zealand, and we have the US dollar. These are the 8 major currencies. Also, we talked about one of our sessions. We talked about the fact that we have 2 classes of this arrangement. We have the quoted currency pair. So when you have currency are traded in pairs, we talked about the fact that currencies are traded in pairs. Okay. We have the base or the primary, and then we have what? We have the base or the primary, then we have the quoted or the secondary. So this background is very important for you to be able to catch up with what we've done so far, because we're going to be progressing on this topic. Okay, so again, if you are joining us for the first time, my name is Michael Martins FX. Based in the United Kingdom, a profitable forex trader, property investor, an entrepreneur. And so it's very, very important for you to understand this background of mine so that you're able to relate with some of yourself. Because sometimes some of you feel like, oh, when you are running one business, you cannot trade again. You can combine forex trading with the property business. You can combine forex trading with your 9 to 5 job if you still want to. So, and let's now progress on these topics for today. Now, what do you have? Classes of currency pairs. Classes of currency pairs. Now, I have my note and paper, and I will never hesitate to jot whatever the needs arises. Now, let me grab my highlighter. We're going to move a bit speedily because this is a big subject. Now, in forex trading, there are three classes of currency pairs. Don't forget, our currencies are traded in pairs. In forex, we trade currencies in pairs, which means when you see a currency arrangement is always in pair, just like what you see on the screen now. You can see Euro USD. So these are two countries pairs together. So we trade them. When you go to exchange, you don't exchange your currency for your currency. You exchange your currency for another currency. So that's what we are basically talking about. Yeah. And what are these three main classes of currency pairs? Okay, we have the major, we have the cross currency pairs, and then we have the exotic currency pairs. So we have the major, we have the cross, and then we have the exotic currency pairs. So we're going to be looking at each of these currency pairs one after the other, and the characteristics and examples as well, because that is the essence of this class. Okay, right now, so what are the major currency pairs? Now we're going to be looking at these by providing examples as well to provide clarification. Now these are currency pairs with US dollar, either as what? The base or the quoted currency. Okay, either as the base or the quoted currency. Remember, last topic we talked about the fact that when you see currency pair like this example here, the first one is what? Your base currency or your primary currency. In this case, euro is your base or primary currency. And the second one, which is USD here, is your what? Your quoted or your secondary currency. Okay? Base and quoted. Primary or secondary. Okay? And that's it. So when we now say that we have three major currency pairs, guys, what we are saying is that we now have, in this arrangement, we now have three classes of this. So we have the major, we have the cross, then we have the exotic. Now we are talking about the major now, currently. Now, we said major currency pairs are currency pairs with either US dollar as either base or the quote. So anytime you see US dollar as either the base here or quote here, this arrangement is major currency pairs. Don't forget that US dollar is the quoted currency for international transactions, right? So that is why any currency pairs with US dollar as either the base or the quoted, then that currency pair is called what? Major currency pair. So that's why we have example here, GBP USD, right? You see, in this case now, in the first one, right, where you have euro, USD was what? Is the what? The quoted currency, because it's the second, at the second side of the arrangement. So it's the quoted second currency, right? Now, in this second one now, GBP is the base, USD is the quoted. So USD again is the quoted here. The third one, USD becomes what? The base, USD JPY. USD is the base, JPY is the Japanese yen, is what? The quoted. In this one now, Swiss francs, yeah? USD is the base and Swiss francs is what? Quoted. Then we have Canadian as well. USD is the base and Canadian dollar is the quoted. We have the Australian dollar, Australian is the base here, USD is the quoted. Now, New Zealand dollar, right, is the base, USD is the quoted. So these are the example of what we call the major currency pairs. Remember, major currency pairs are any currency pairs where USD is either the base or the quoted currency in that arrangement. So when you go to trading terminal, guys, you want to trade. I say, oh, today I want to trade some major currency pairs. So whoever you are speaking to, if the person is inclined, the person already understands that, oh, you want to trade any currency pair with either USD as the base or the quoted. That's just it, guys. So this knowledge helps you to be able to make informed decisions and be able to speak like a knowledgeable forex trader, right? So let's try let's go to our next slide here, right? So let's go to our next slide. Okay, so our next slide here. So we look at major currency pairs explained. Okay, we want to provide further explanation to what we have explained. regarding the major currency pairs. So let's quickly wipe these ones. These are our highlights here, so that our screen doesn't look so distracting and all that here. So on this slide, we provide further explanation to what, and obviously example to what we discussed before. Okay, major currency pairs explained. Okay, let's grab the highlights again. Now let's clean this one. So highlights again. So major currency pairs explained. Euro USD, don't forget, major currency, because USD is either the base or the quoted. In this case, USD is the quoted US dollar. Yeah, the most traded currency pairs. We are talking about the characteristics now, right? The characteristics, what actually make them major? Why are they major? Actually, right? Why is the USD major? We know that, okay, we understand the fact that whenever USD is the base or the quota is the major, but why? Why? So that's the characteristics now we're talking about. The most traded currency pair accounting for approximately 22.7% of the total daily trading volume. Now, every day in the Forex market, if you have not seen the video why Forex market is so popular, you have to go and see it. That's why we said every session in this series matters a lot. Every session in this series matters a lot. Yeah. So over $7 trillion are traded in the Forex market every day. Why Forex trading is the most popular? Over $7 trillion are traded every day. Now imagine over $7 trillion traded every day. Now we now said that Euro USD accounts for 22.7% of the total daily trading volume. That is highly significant, guys. You see why this is also described as a major currency pair, right? Now, another point to note is USD JPY, for instance. Okay, so we are picking each currency pairs in the major currency pair and then provide an insight into them, and that's what we are literally doing here. Each currency pair in the major currency pairs, then we'll provide an insight into it. So the next point to note is USD JPY, guys. We say this pair is popular due to the volatility of the Japanese yen. Remember, we talked about the fact that in the previous session, Japanese yen is is like a safe haven, right? And there is a background we provided there after the Second World War. It used to be obviously coated with gold, edged with gold. But after the Second World War, it lost a significant portion of its value, right? So you need to go and watch that video, and that will provide you an insight, okay? And then where were we? So we said this pair is so popular due to the volatility of Japanese yen and the stability of the US dollar, making it one of the most favorites, or one of the favorites amongst traders. And that is the truth. USD JPY is one of the most traded currency pairs among traders, right? GBP. You can't be a forex trader and not traded GBP USD. That you have not started, literally, right? GBP USD, known as cable, right? This pair is influenced by political and economic events in the UK and is characterized by its volatility. Remember, in this case now, GBP is the base and USD is the quoted. That makes it major currency pair. Okay. The next point of note is USD CHF, right? Now, what do we have there? Now, CHF, which stands for Swiss franc, right? Often considered as safe haven currency pair. It is used by traders looking for stability during the market turbulence. Okay, that is another fact about that for those that are trading that. Now, the next one is USD Canada dollar. This pair is influenced by the price of crude oil, as Canada is a major oil exporter. I think that is self-explanatory. We need to proceed. Now, Australian USD. Australian USD, this pair is affected by commodity prices. We know that one of the major commodities in Australia is metal, which is gold. Okay, so Australia is usually associated with gold. basically. So this pair is affected by commodity prices, particularly metals and agricultural products, as Australia is a significant exporter. Okay. Now, seventh one, we have NZD, New Zealand, and USD. In this case, USD is what is the quoted. Now, similar to the Australian USD, this pair is influenced by commodity prices and is known for its volatility. Okay, I hope that this session, this particular slide is making sense so far. So let's clean up what we have here, because we're going to go to the next slide as well and see what we have here. Like I said earlier on, this particular session is one of the biggest, most voluminous of all the sessions we've had. So we want to move quickly so that we don't have a very lengthy session. So let's go to our next slide there. Characteristics of major currency pairs. So this is obviously in progression from the previous slide. High volatility. But why are they major? What are the characteristics? High volatility. The fact that this currency pair they are very volatile. Major currency pairs are the most liquid in the forex market, allowing traders to enter and exit position within minimal slippage. Okay, so slippage is just basically, sometimes one of our sessions I talked about the fact that when you enter the market, sometimes you see some of them once you enter the market, you are already in -20. We are already in -20 in terms of spread. So slippage associated with spread. So this is how the brokers they make their money basically. But when it comes to this major currency market, their slippage is kind of minimal compared to the exotic one. Because the exotic one, because they are emerging market, so they tend to be a wide level of amount of slippage and of spread, which is one of the costs that we pay to brokers when we are trading, basically. So with what this line is literally saying is that with the major currency pairs, right, there is a minimal level of slippage. They are very liquid. Why are they very liquid? Because one of the most traded. That's why they are liquid. A lot of traders want to trade them. Okay, so you can exit and enter and exit with minimal slippage. Now, low spread, which again ties to what we talked before, okay? Slippage that we talked about. These pairs typically have lower spread compared to minor or exotic. Again, more like I was explaining what I already previously explained before now. So minor and exotic, they're reducing trading costs for trader. I talked about the slippage and the spread, that these are the costs that we pay to brokers when we trade. So one of the benefits of these or characteristics of these major pairs is that they have lower spread. So they have a lower spread compared to the exotic. And I told you about the exotic, the emerging market. Okay, we'll come to that. So reducing trading costs for traders. So traders tend to go for them. Okay, stability. One of these factors or characteristics is stability, guys. Why? The economy behind these countries are generally stable, which is understandable. You talk about United States dollars, you talk about Great British pounds. I mean, relatively, no economy in the world is 100% stable. But then when you're talking about relative to other emerging countries, you can tell that these economies of these countries, they are relatively stable, right? So because of that, traders want to trade them, right? And obviously that's what makes them one of the factors that make them major currency pairs. So this note that I put here, right? Understanding these major currency pairs is essential for forex traders, as they represent the most significant opportunities in the market due to their trading volume and liquidity. This is just tying to what I've been talking about. When you understand or have knowledge of these things that we talked about, it enables you to be able to make informed decisions, right? Informed decisions in terms of what currency pairs you want to trade. But guys, you can't just get into the market and say, oh, I just want to trade this, I don't want to trade that. No, it doesn't work like that. To be a Forex, a profitable and successful Forex trader, you must plan. Plan yourself, plan your activities. What currency do you want to be trading? I know of a trader that only trades gold and is successful. I know of a trader that only trades GBP USD only, no other currency pair, and they are successful in it. So that's what we are talking about literally, guys. Okay. So these currency pairs, understanding of the currency pairs enables to make informed decisions. So now let's go to the next slide. Okay. I hope this is making sense so far, guys. So the next one, remember, 3 classes of currency pairs. We have the major, obviously the cross, and the exotic. So we come into the second one, which is cross currency pairs. So what are cross currency pairs? Now let's look at it. Cross currency pairs in the forex trading are currency pairs that do not include US dollars, either as what the base or the quoted currencies. Remember, the major currency pairs, they include US dollars, is either base or the quoted. So with the cross currency pairs, they are currency pairs that do not include US dollars, either as base or as the quoted. Though they may be major currency pairs. Remember, we have other major currency pairs, right? Like Japanese yen, GBP, Euro, and all that. These are major currency pairs. Yeah. Major currencies different from major currency pairs. When we're talking about pairs, we're talking about 2. So major currency pairs, major currencies. So now cross currencies are currency pairs that do not include US dollars. In fact, if I were to provide another definition or clarification, I can say cross currency pairs are major currency pairs that do not include US dollars. But the thing is that the currency pair may not actually be major. It could be other currency pair included, but included with other major currencies that are not US dollars. That makes them cross. You know, when you say cross currency, when you cross a thing, so you cross some major currencies with some other currencies. That makes them cross currency pairs. Okay? So this is very self-explanatory. These are other major currency pairs, which is what I've just said, but without what? United dollars. Okay? Examples include Euro JPY. You can see Euro is a major currency. JPY is a major currency. But what happened is that we cross them without including US dollars. So that's what you see littered in all the examples we have there. GB is a major currency, GBP. Australian dollar is a major currency. Cross the two together, no US dollar. So when we have examples there, look at the examples there, cross currency pairs. Yeah, you can see here, you can see here, you can see here. You don't find US dollar there. All these are major currencies, but there's no US dollar. Yeah, there's no US dollar there. That's what makes them cross currency. Okay, I hope that is making sense so far, right? So let's go to our next slide. Cross currency, we said. Now our next slide now is exotic. Now let's wipe this, let's clean this, what we have there. The next slide is exotic. Okay, our next slide is exotic. Exotic. Yes, I'm so super excited, guys. I hope this is blessing you so far. So what are exotic pairs? Remember, we have 3 currency pairs. We have the major, cross, and the exotic. We said the major currency pairs are currency pairs with US dollars as either the base or the quoted. The cross currency pairs are major currency pairs without US dollars. Now the exotic one, which is the last one. Now these are pairs comprises of one. Let's take our highlighter. These are pairs comprised of one major currency and one emerging market currency. One major, one emerging. When you bring them together, it is called exotic pairs. Guys, you need to understand this. basics for you to go into the market and call yourself a professional forex trader. Okay, these pairs comprises one major currency and one emerging market crossed together. Examples, we have euro and Turkey, euro and Turkish lira, right? Euro and what? Mexican peso, right? Singapore dollar and what? GBP USD, and on like that. So we have examples here, guys, right? We have these examples. We have currency pairs, then we have the currencies. Yeah, so we can see Hong Kong dollar and GBP and USD. Then we have what? British pounds and South African rands, Australian dollar and the Mexican peso. We have USD and Thailand baht. We have what? USD and Russian rupee, ruble. Then we have USD and Swiss what? Krona, and on like that. Mexican peso, USD and what? Chinese yuan rather. Then we have USD and what? Norwegian krone, right? So these are major currency pairs. Okay, sorry, exotic pairs. So we have major, cross, and exotic. Oh, that makes sense to you guys, right? So let's look at our next slide. Let's see what we have there. So yes, so we are going to stop here for today. And when we meet again, we're going to talk about exchange rates. But that's literally what we have for you today. So on this session, we talked about, let's look at what we talked about in this session, right? Let's look at what we talked about in this session. We talked about classes of currency pairs. The major currency pairs, right? US dollar as either base or quoted. Then we have the what? We have the characteristics. Then we have the cross currency pairs. Then we have the exotic pairs. I hope that makes sense to you guys, right? Don't forget to like and subscribe. Guys, Michael Martins FX. Until then, bye to you. Bye. Bye, guys. See you next video. Our next video. Bye.